When you hear the word investing, what is the first thing that comes to your mind? Do you think investors are people with fancy suits on Wall Street who sit in front of their computers watching the stock market all day? In this video, I'll help you clear some of the misconceptions you might have about investing. You will learn what is investing, how to start investing as a beginner, and where to invest your money. If you're ready, let's dive right in. So, what is investing? Investing simply means the process of acquiring assets that increase in value over time. In other words, investing means putting away money that you could use right now for a greater reward in the future. But why do people invest their money when they can simply save it in the bank? Saving money is a good practice because it involves lesser risks than investment. However, you cannot beat inflation by saving all your money in the bank. The interest rate on most savings accounts is so low that you end up losing money over time. Think of how much gas you could buy with $10 2 years ago. Could you still get the same volume of gas for $10 today? That's how saving without investing eats into your money. It is clear from this explanation that just earning money and keeping it idle is not the way to grow rich. The rich are getting richer because their investments help them beat inflation and make more money. With that said, let's talk about how people make money investing. Maybe the reason why you have not considered investing is that you don't understand how people make money from it. Keep watching this video to find out the two major ways that the rich make money from investing. But before then, you must understand that investing is typically a long-term commitment. It may take some days, months, or even years for you to see results. This also means that investing involves some level of risk. And the higher the level of risk, the higher the likely return on investment. For example, when you invest in a company, you are committing your money to them to use in running their business. If they succeed, you make more money. But if they fail, you may lose all your money. So what are the two major ways the rich make money from investing? 1. Through capital gain. 2. Through income-generating assets. Let's start with the first one, which is capital gain. This is the profit you make from an asset when you sell it for a higher price than the original purchase price. For example, when you buy land in a prime location and after a few years you sell it for a higher price, you have made a capital gain. Another practical example of this is the Tesla stock. Let's assume you invested $100 in Tesla stock 10 years ago when the value was about $6. Your investment will be worth over $10,000 today. So if you sell it off today, your capital gain is the difference between the purchase price and the price you sold it. The next method is through income-generating assets. Just as the name implies, these are assets that yield additional income called investment income. They can come in different forms such as interest, rent, or even dividends. You will learn more about each of these methods later in this video. But for now, let's talk about how to start investing. 1. Invest in yourself. When many people talk about investing, what they mean is real estate, stocks, bonds, or even cryptocurrencies. However, the best investment you can make is in yourself. This is the only investment that cannot be affected by inflation or taken away from you. Warren Buffett rightly put it like this: ultimately, there's one investment that supersedes all others. Invest in yourself. Nobody can take away what you've got in yourself, and everybody has potential they haven't used yet. So how do you start? Watch educational videos like this one that you're currently watching, buy books, learn new skills, attend seminars, and invest in your health because health is wealth. 2. Real estate. This is one of the oldest and most popular types of assets you can invest in. You can make money from real estate through capital gain when you buy a property at a lower price and sell it at a higher price in the future. You can also make money from real estate investment in the form of rent. This provides regular income for you, and you also enjoy certain tax breaks when you invest in a rental property. Another popular method of making money with real estate is through house flipping. That is, you buy a property, renovate it, and can sell it at a higher price. Lastly, you can invest in real estate investment trusts or REITs, which is similar to buying stocks of a company. Just at this time around, you're investing in a company that uses your money to purchase real estate properties. 3. Stocks. This is perhaps one of the most popular investment options available today. When you invest in the stock of a company, what you're simply doing is buying into the ownership. And just like the other types of assets, you can make capital gains when you buy a stock at a lower value and sell it at a higher value for profit. Another major way of making money with stocks is investing in a company that pays dividends to its investors. A good example is Coca-Cola, where the investors receive dividends from the company quarterly. Lastly, you can grow your wealth with stock through compound interest. Let me show you how money grows through compounding with an example. Assuming you start investing $100 every month for 10 years in a stock with an average return of 10%, you will have $19,124.91. If you put this amount in the bank every month, you will have just $12,000. Although the difference might seem small, let's assume you keep investing the same amount for 20 years under the same condition, you will have $68,730. If that amount was left in the bank, you will barely have $24,000. No wonder Albert Einstein once famously said, "Compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it." 4. Retirement. I cannot overemphasize how important it is for you to start saving and investing towards your retirement, even if you just started working today. The previous example on compound interest shows that the earlier you start investing in your retirement account, the more money you will have to enjoy when you stop working. You can start with a 401k plan, which is an employer-sponsored savings plan that allows workers to contribute a portion of their income into a retirement savings account. Another method is to use an IRA account, which is short for individual retirement account. 5. Commodities. Lastly, you can invest in commodities such as gold, silver, and other precious metals that increase in value over time. These are not the only investment options that are available for you. But we cannot possibly cover everything in a single video. So make sure you hit the like button and subscribe for more practical financial solutions that will help you grow your wealth. In conclusion, there is a popular Chinese proverb that says, "The best time to plant a tree was 20 years ago. The second best time is now." So if you've not started investing, the best time to start is now. Thank you for watching this video.